Hello fellow traders, Marv Eisen here from Timeless Dollar Trading Academy. And I'd like to speak about something that I've pointed out on previous videos regarding when the price opens just about at the middle of the calculated trading zone for the day. And I'm going to take examples from Monday, October 6th and Wednesday, October 8th. Now here's the chart of Monday, October 6th. And prices started out in the middle of the trading zone, quickly dropped down to a relative point just above the previous day's close. And I'm going to, and just bear this in mind, all right? I'm going to also go over to Wednesday, October 8th. Prices also started out at the middle of the trading zone, dropped down to just about the previous day's close. And so I want to call your attention to this candle right over here, the candle just about at the previous day's close, and notice that it is a hammer. Now prices didn't actually close the gap. They came within a point or two of closing the gap, which you should consider as having closed the gap. So a gap trade, but nevertheless, I want you to take into account what prices did after the price came down, just touching the trading zone, just touching the gap rather. And notice the formation of the candle, and these are 3-minute charts. This is a 3-minute candle. Notice the hammer on Wednesday, October 8th. Going back to Monday, October 6th, notice the hammer, all right? Very similar. Same setups, similar trades. The prices opened in the middle of the trading zone, and very often I recommend if prices open in the middle of the trading zone, maybe you decide not to trade that day, because prices are, they could go up, they can go down. But in both cases here on Monday, October 6th and Wednesday, October 8th, prices opened above the previous day's close, came down to the previous day's close just about, didn't quite close it, but you should consider it as having as being a gap trade closed. But notice that the candle just prior to the price touching the previous close was a hammer, and then prices moved up from there. So if you decided not to trade the early morning, and this was the trade from the first 45 minutes of the day, all right, this is 9:30 and this is 10:15 or 10:10. If you missed it, notice the candle forming just at the previous day's close, and then prices taking off from there to the upside. Going back to Wednesday, October 8th, same thing. Prices coming down to the previous close and forming a hammer. Prices moved up from there. And so that's something that you should look for when prices open in the middle of the trading zone. Not the most opportune time to trade, because they could go up, they can go down. But in both cases here, the prices came down to just about the previous day's close, closing the gap, but then taking off from there, but forming a hammer, indicating that not only was the gap trade closed, but the hammer indicated prices moving up in the opposite direction. So that's my video for today. This is a good trade opportunity to watch for in the future. It'll happen again and again and again. Trade safely, use lots of patience. Thanks so much for watching. I'm Marv Eisen from Timeless Dollar Trading Academy, and I'll see you in my next video.